Dun, 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 dun. Yay. Fantastic. Fantastic. Hello, hello. Yes, we are on and we are live. Gotta love it. All right. There I am. Perfect. Fantastic, everyone. Hello, hello. Good evening. It is June 2025. How's everyone feeling tonight? Hi there and welcome. I am Natasha Tomlinson, your Arizona Realtor with some experience helping homeowners buy, sell, and build wealth through real estate in the greater Phoenix metro area. I have a couple questions for you to kind of get things started while people start to come into tonight's webinar. What is your dream location? If you were to retire, tell me, where would you like to be? Beach, desert, mountains, or right in the heart of it? Would you like to be in the big city? Let me know. Let me know. I'm curious. I am curious. That's right. I am very curious. I go back and forth. There's so many beautiful places in this country, in the world, right? So if you're fortunate enough to be able to experience them, man, I mean, beaches, the desert has a lot to offer as well. Mountains, I personally love to hike. So that would be a big selling point for me. And I've been in the Phoenix metro area now for 28 years, and these sunsets and these views, it just never gets old. It's beautiful. So yeah, yeah, just curious how everyone is feeling out there about that. And you know if your house, if your home, your current home could talk, what would it say about your time together? Right? Have you seen some things? Have you had great memories? Is it ready for a facelift? I mean, really, what would your house say if it could talk? All right, let me know. Let me know in the chat. And then I'm curious too about how long have you lived in your current home? Have you been there a year, less than a year, 5 to 10 years, 10 years or greater? And let's see. If you had a magic wand, what's the one thing that you would fix or upgrade in your current home? Would you change the backyard, update the kitchen? Do you need a new roof? I mean, what is that one thing that you would change? Just some things to think about. Feel free to answer in the chat. Tonight's webinar is called Your Options, Your Equity, Your Future, because that is ultimately what it's all about, right? Options, strategy, and knowing how to make your next move with clarity and confidence. So, whether you're downsizing, you're relocating, trying to figure out what to do with your current property, we're going to break it all down for you tonight, and you will walk away knowing what it takes, get a glimpse of what it takes to sell in a buyer's market. And a lot of the areas in the Phoenix market right now are in a buyer's market, slight buyer's market. So, how to keep your equity protected and move towards your goal and eliminate a lot of that guesswork. So, let's dive in. Right? Let's start with what is happening in the greater Phoenix metro area. What is happening in this real estate market? Important to understand today's market. You're going to learn why housing affordability is slowly improving, even without those big mortgage rate drops that we've all been hoping, wishing, praying for, talking about ad nauseum, and what that means for buyers and sellers this summer. So grab your favorite drinky drink and let's dive in. When we talk about housing affordability, we're really looking at three key factors. We're looking at mortgage rates, home prices, and wage. We're looking at incomes, right? And the growth of those incomes. Now, over the years, historically, if home prices climb too quickly for incomes to keep up, mortgage rates would drop and help level things out. But lately, the last few years, rates have been volatile and slow to cooperate. So, what's changed, right? The good news is thanks to rising wages and lower inflation and stability in home prices. Yes, stability in home prices. Affordability is improving on its own. And if mortgage rates dip this summer, like many who are way smarter than me are predicting, we'll see. We could see a surge in buyer activity. It could happen, right? All right, let's take a moment and talk about what's happening in the housing market, particularly right now, especially from the builder and the economic side. Because even if you're not building a home right now, this still impacts you as a property owner. Okay. Builder confidence is slipping away. And according to the National Association of Home Builders, the NAHB, confidence among home builders fell again in June. And the housing market index dropped to 32. And that's a third lower that lowest it's been since 2012. Here's the key. Anything below 50 means builders are seeing more negative than positive conditions. And so, why is this happening right now? It comes down to three big factors, right? Higher interest rates, higher than we would like, which are still pricing out many buyers, tariff concerns, which raise the cost of materials, economic uncertainty, which causes buyers to hit that pause button, pause their plans. And this decline in confidence means fewer builders are motivated to start new projects. In fact, the NAHB, that National Association of Home Builders, is now predicting a drop in single family housing starts this year. And that creates a bit of a ripple effect, right? That ultimately affects inventory, it affects pricing and the competition around you. Housing starts and permits. Another bit of a dip, right? Speaking of starts, after a brief bounce back in April, new home construction fell by almost 10% in May. And most of this is due to a sharp pullback in multifamily projects like condos and apartments. We do have more than our share of condos on the market right now and apartments as well, right? So single family home construction was basically flat. It's up just 0.4%. Building permits, which are a signal of future projects, also dipped 2%. So even builders that want to build more, they're hesitating. And the takeaway is supply is falling short of demand. We're seeing an annual pace of 1.26 million homes being built, but we need about 1.8 million just to keep up with household formations in the United States of America. This shortfall continues to support home values being steady, and especially in areas like the Phoenix metro area where we are in growth mode, we are in expansion mode, and we are in demand. So let's talk retail sales and what that says about our economy. Let's zoom out for a moment on one of the biggest drivers of our economy, and that is consumer spending. Yes, us Americans love to buy things, and retail sales, the money we spend at stores, restaurants, gas stations, it's dropped. It's dropped 0.9% in May. That's 2 months in a row of decline. People are pulling back on purchases, especially those big ticket items like building materials, gas, and automobiles, right? But there's something encouraging when we remove those more volatile categories, the core, the meat of that spending group actually rose. It rose a little bit, 0.4%, but it's up and we'll take it. Better than expected. The good news for the GDP, the gross domestic product, and may signal that consumers are adjusting and not collapsing. Still, the Fed is watching these numbers pretty closely. And if spending slows down too much, it could lead to changes in interest rate policy later this year. And yes, it will impact mortgage rates and not the way you want. What does this mean for you as a home buyer? We're in a bit of a transition period. Builders are pulling back, inventory remains tight, but wages are up, especially in the Phoenix area, and inflation has cooled. That's helping bring affordability back within reach, even with mortgage rates staying relatively high. The bottom line here is if you're thinking about buying, this is exactly the kind of moment to watch closely, because if rates drop and inventory stays limited, buyer competition, it'll heat up and it'll heat up fast. So don't wait until everyone jumps back in at the same time. Be prepared now. Let's talk the numbers, right? Nationwide, wages grew by 4.3%. while inflation is sitting around 2.4%. But in Phoenix, in the Phoenix metro area, we saw an impressive 9.3% increase in wages when compared to this time last year. And our local inflation is just 0.3%. Natasha, what does all this mean? All these numbers, what does it mean? Arizona, we are finally keeping more money in our pocket, right? A little bit. It's ours. And we're keeping it. And that's a bit of a game changer. And it creates more buying power. Phoenix is now entering into its 8th month as a buyer's market, and prices under 500,000, they make up about 50% of all the homes for sale, are down. It's down 2%, 2.2% when compared to last year. Overall, appreciation is pretty flat, just around 1%. All right. So, which actually is lower than inflation. So, while prices aren't crashing, they are definitely leveling out. We did see a dip in sales for May 2025, but that's likely due to all the talk of tariffs and interest rates, and it spooked the market a little bit, right? The good news is the buyers came back. They came back in May and they coming back in June. And we are seeing an 18% increase in mortgage applications, an 18% increase when compared to last year. And that's the highest it's been in 2 years. So that's a pretty good buying signal. If you're in the luxury space, pay attention. May brought a surprise bounce. Crypto and stock market rebounded. Corporate profits were strong, and the international exchange rate normalized a bit. All this led to an increase in million-dollar contracts over recent weeks, and that's pretty rare for May. Usually Arizona, once temperatures start hovering around 100 degrees, people get out of here. All right. So it's unusual to see that activity in the luxury market. At the same time, sellers are starting to step back a bit, right? New listings are down. Weekly cancellations are up 38%. And we've seen more expired listings. We have more million-dollar listings on the market, and we've seen more of those expire over the last year to the tune of 84% increase in listings expire in that price range. Now, sellers, it doesn't really seem like they're listing again right away, right? They're like, let's wait and see. The wait and see approach, right? There's a cost to waiting, but to each their own. They're renting, they're pausing, they're sizing up the market. If you're a seller, especially in the luxury range, know this: June is peak cancellation season. Inventory is shrinking faster than buyer demand. And that means your listing, it could actually stand out above the crowd before the fall rush. So buyers, the summer might be your best window of opportunity. Wages are getting stronger, prices are stabilizing, and we're seeing more buyers getting back in the game. So whether you're looking to buy, sell, or just stay informed, now's the time to get that strategy in place. So again, right now, maybe you're listening to this later, so I wanted to preface that it is June 2025. And for the Arizona real estate market update, we are currently seeing 16 out of 29 cities in the greater Phoenix metro area are in a buyer's market. What are those cities that are in a buyer's market? We have, let's get it right. Yes, we have Arizona City, Casa Grande, Buckeye, Maricopa, Laveen, Sun City West, Sun Lakes, Tempe, Peoria, Goodyear, Surprise, and Cave Creek. So, who is in a seller's market? And I do mean a slight seller's market. Currently, that is El Mirage, Anthem, Tolleson, Apache Junction, Paradise Valley, Fountain Hills, and Avondale are in slight sellers markets. And then balanced markets where we're seeing an even number of buyers and sellers right now. We have Chandler, Glendale, Phoenix, Mesa, Scottsdale, and Gilbert. Now, all of this compared to a year ago, we're seeing more listings, longer marketing times, longer days on market, and more price reductions across the board in all price ranges. Now, that's not necessarily a bad thing. It just means that if you are deciding to put your house on the market, you need to have a strong pricing and marketing strategy to stand out. The good news is that home values are holding relatively steady, especially for homes priced below $500,000 and in move-in ready condition. Now, why? Why is this? Well, from a job and economic perspective, Arizona continues to attract big players, right? We're just not the vacation place or the place where people retire. We have a lot of jobs coming to the area. Particularly, we have Intel, and TSMC is expanding in Chandler and North Phoenix. Lucid Motors is hiring in Pinal County. GTI Energy is bringing 600 jobs to the Goodyear area, according to AZ Big Media. Healthcare and logistics growth in Mesa, Buckeye, and Glendale. And if you don't take my word for it, drive around town and get a feel for the growth. Deal with the road construction. We're preparing for people moving here. You can't just have them coming. We all just sit on the freeways. It'd be a bit of a parking lot. So yes, there will be road construction making way for the people to come. Buyers are still buying, but they're cautious. They're strategic, and they are budget conscious. Your listing has to shine and be priced right. When you're selling in a buyer's market or even a balanced market, the power has shifted slightly. And most people have a lot of feelings about that, but facts are facts. And this doesn't mean you lose leverage. It just means that you use tools differently. Here's how that works. Seller concessions. Let's see here. Yes, seller concessions would be one option. Offering help with buyers' closing costs makes your home a bit more attractive, right? Especially to buyers with FHA and VA financing. It could mean the difference between just looking at your property or making an offer on that property. Interest rate buy downs. Are you working with a strong, trusted lender? You can offer to lower your buyer's interest rate temporarily or permanently. It's more common temporarily because interest rates fluctuate. A 2-1 buy down can help buyers afford more home and still get you to your price. Another option, all cash offers. They're fast, you have little hassle. You can market your home to cash buyers and investors and present those options with no pressure. Loan assumptions. If you have an FHA, a VA loan, a government backed loan at a low interest rate, there are some buyers that may be able to assume your existing mortgage. And this is pretty powerful and marketable. Or seller financing. Do you own your home free and clear? Do you have a lot of equity? Do you not need access to that equity right away? Well, offering financing could help a buyer who can't qualify traditionally at terms that benefit you. Each of these tools help your home stand out above the rest without slashing that price, right? So if you're not sure if selling is right for you, maybe you consider renting it out. Oop, wrong way. Maybe. Yes. Okay. Yes, maybe you consider renting it out. And there's pros of cons of everything, right? So the pros would be monthly income, mailbox money, potential long-term appreciation, and that's a great option if your next move isn't immediate, right? And the cons are your landlord, and being a landlord isn't for everyone. You have a potential tenant turnover and wear on the property. And market rent may not cover your operating costs. It may not cover your mortgage and the cost to maintain the property. So you'll need to evaluate all this, evaluate your equity and your cash flow, and whether you want to manage a rental property yourself or hire a property manager. Now, I have helped homeowners evaluate both scenarios so you don't make a move that you'll regret, right? If you happen to fall behind on your mortgage, or you're on the edge or the precipice of falling behind on your mortgage, listen, you are not alone. All right. A lot of people have a lot happening in their finances right now. We have dealing with record credit card debt and high card payments and student loan debts, and some folks are dealing with job losses and other life events. Things happen in life. So here are your non-judgmental, real options. Say you want to stay. You're like, Natasha, listen, selling my house is great. That all sounds great, but I need to stay in my house. Okay. Well, it may be possible for you to do a loan modification or forbearance, and you work that out with your lender. They adjust the terms, temporarily delay payments in some cases to help you get back on your feet. A short sale may be an option. And a short sale is when you have negative equity, meaning you owe more on your home than your property is worth today, and you just can't keep up with payments. A short sale might be the best move with the least damage to your credit. Or an equity sale. Some folks who are behind on their mortgage, they have equity, and you can sell it the normal traditional way. And we work with lenders and attorneys to help you exit the property with dignity and move forward. Or you could do an all cash sale with flexible closings. Sometimes it's just about getting a clean slate. You don't have to stay stuck. You don't have to be ashamed. It's important to discuss your solutions. And if you're thinking about buying and selling at the same time, you're like, well, I'm current on my mortgage. I need a different space. You need more space. You don't need enough space. Here are your main strategies, right? And we're talking very generalities here. If you'd like to talk to me about what your particular situation is and how build a strategy around it, we can certainly book a call to do that. But your main strategies, if you are thinking of buying another property and selling your existing property, you could buy it first and then sell your existing property. This option really requires a strong financial backing or a bridge loan, right? And it's ideal if you don't want to move twice, right? I mean, let's be honest, moving is a pain in the caboose, right? Option two, sell first and then buy, right? There's lower financial risk and it may require a short-term rental or a sale and lease back. And, that has its own challenges. You're moving more than once, right? Then we have the contingent offer. The contingent offer is you find your next home and you submit an offer contingent on your existing home selling. Excuse me. Been talking a lot. Now, this can be tricky and it really requires strategy and it requires clear constant communication with all parties to have that carry out successfully. Now remember, if you are moving up, today's slower market means less competition and more negotiation power on your next move. So here's what you can expect. If you choose to work with me, you can expect professional photography, video, and virtual tours. You can expect a massive online exposure through the MLS, Zillow, Trulia, Realtor.coms, Homes.coms, Google, and all the social media networks, 100 plus portals that are available out there. You can expect target marketing to buyers and to other agents, both in the area and outside of the area. You can expect strategic social media campaigns. You can also expect direct outreach to pre-approved buyers, those renting, relocation departments, relocating clients. You can expect weekly reporting, transparent communication. You mean don't shoot the messenger. Okay, I'll tell you what it is. It's the market. It's not my personally telling you that you need to do this. It's guiding you to the best course to achieve your goal. All right. And custom pricing and negotiation strategy. I've helped Arizona homeowners sell in every kind of market over the years, and I know how to make your listing stand out and how to sell smart. Now, you know that you've got options, and that's a powerful place to be. So, whether you're looking to cash out, to downsize, relocate, or just get back on your feet, I'm here to help you protect your equity and create your next chapter with confidence. So, let's schedule that free, no pressure, no obligation consultation. I'll be sure to leave my link in the chat and then in the description for those who are listening later. If you need a property evaluation, if you want to just explore cash offers, I've got you. And if you DM me on Instagram or call direct me, I'll leave my phone number as well to discuss your real estate needs. Now, remember, you're not just selling a property, right? Whether it's house, condo, townhome, manufactured, whatever. You're not just selling a property. You are helping to shape your future. And let's make sure you do it right. So I wouldn't be a realtor if I didn't at least ask, are you considering making a move in the next 30, 60, 90 days? Considering making a move in the next 12 months? Well, it's important that we speak and talk about strategy. So here's how we move forward. We book that free, no obligation home consultation. We schedule that seller strategy call and get you connected with a trusted lender to prep for your next purchase. Again, I'll be sure to drop the links here for you, but I wanted to, first off, thank you for joining me today. All right. I know that your time is valuable and I appreciate you spending some of it with me. I do hope that you've learned something new, and otherwise, feel free to follow me for more weekly tips. I'm here to help you navigate your next move with confidence. So let's see what questions, if any, have arisen during this time that I've been yammering on, right? All right. What questions do we have? Yes, as we said earlier, you can rent out your home instead of selling it. That is definitely an option. Whenever you consider doing this, I would suggest that you speak to your tax professional and also talk to your insurance agent because a different policy may be required. All right. So, if that's what you want to do, we can certainly talk a little bit, give you an idea of what rents are going for in your area, and create a strategy around that. Are you what type of rental are you renting? Are you interested in doing? There's long-term renting, short-term co-living, renting to executives and nurses. And so just getting a feel for what your options are, what you can really bring in, what your costs are, and if it makes sense for you. So make sure to book that call and we will do that. Let's see. Next question. Capital gains, capital gains. Now, let me tell you, okay, you may have owned the home for a while or you have a lot of equity. First and foremost, I will tell you, I am not a tax advisor. I am not a CPA. All right. So one would be so I'm not familiar with your full financial profile, and I would say to consult with your that person in order to get the real numbers. But generally speaking, right, capital gains, you get up to 250,000 in capital gains if you're single, and up to 500,000 if you are married filing jointly. Okay. As long as you have owned the property as your primary residence for 2 of the last 5 years. All right. So, if you'd like to talk about that further, again, be sure to schedule that call. Great. Well, it looks like, yep, yep, yep. I'll put the link. I'll put the link in here for you. Oh boy. I don't know if you guys can hear that. It's summer, right? And the kids are out for summer, so somebody is playing Metallica out there. And I don't know if you can hear that or not, but I'm continuing anyway. I had one earlier, someone was practicing the drums. I was like, "Oi." And then the now I have someone is playing Metallica. Amazing. Okay. There's the link. Folks, I thank you again for listening today. If you have any real estate related questions, I welcome you to reach out. Until next week, we are here every week. Tuesdays is more of a buyer's webinar. Wednesdays, we gear it more towards seller. In the future, I may invite someone else to join me here, but that just means it's going to be longer. So, in the meantime, have a wonderful evening and I will see you soon.